Hey everybody, it's Braden here from Royal LePage, Little Oak Realty, and the Lystra team. Welcome to my housing market update for September. We had low sales and high inventory. A little more of the same. We've been seeing this over the past several months, but the Fraser Valley is now moving toward a buyer's market. Unsurprising, but it is new, so let's jump into it and see exactly what that means. So, sales slumped month over month. They dropped about 8% from August, and now they are more than 30% below that 10-year average, something like 33%. So this has been going on for quite some time now. For the past few months, we've had that very unseasonably low demand. And of course, people are on the sidelines. Buyers are waiting. It will be some combination of interest rates coming down and prices coming down before everybody gets that signal to come rushing back in. And believe me, they will. It is only a matter of time. Inventory surged as well. Active listings were up about 5% month over month. They're now at a level we haven't seen in over a decade. I track the inventory levels as compared to that 10-year average, and right now they are over 20%, 21% over the 10-year average. We are firmly out of a supply crunch, which we have experienced over the past few years, and now we are in oversupply conditions. So anytime we have sales way down and inventory way up, of course, we're going to see prices start to fall. Now, for the past few months, from spring through summer, we didn't see prices fall all that much, but now it is starting to change. Prices are easing across the board. Detached homes were down 1.2%, townhomes 1.5%, and apartments 1.6%. So with all of this in mind, I find it hard to disbelieve that we won't see prices continue to fall. I think it's only obvious that they will unless we see a big change. My second story here, interest rate cuts in Canada. There have been calls by top experts for bigger moves. The United States led the way here. The US Fed did have their jumbo-sized rate cut. And it was my opinion that they did miss one rate cut there, which is why they went for the 50 basis point or half a percentage point cut. And now there is growing speculation that Canada could follow with a larger cut as well. Many economists are arguing that interest rates in Canada are simply too high with respect to the current economy. And if they don't start cutting rates more aggressively, we are going to see a greater potential for recession. So at the upcoming announcement, which is, I believe, on October 23rd, look to the Bank of Canada to be announcing possibly a 50 basis point or half a percentage point cut. My third news story here that I felt was interesting enough to show was the U.S. job market. It surged in September. The U.S. added 254,000 jobs, far exceeding expectations and bringing the unemployment rate down to 4.1%. It was led by strong hiring in healthcare and hospitality, and wages also saw increases. So why does this matter? Well, of course, it all relates to the real estate market because it affects interest rates. So with inflation easing and a strong labor market, the Federal Reserve is likely to take a more measured approach to rate cuts, meaning that we probably won't see more jumbo-sized rate cuts in the States, these 50 basis point cuts. We're more likely henceforth to see maybe a 25-point cut. That seems to be much more likely. Anyways, thank you so much for watching my housing market update video here. Thanks for tuning in. And if you have any questions for me whatsoever, please don't hesitate to reach out. Bye now.